Hello, everybody, and welcome back for another episode of Thriving at Home. My name is Paul Orlando. I am the community liaison for Right at Home. And today's guest is a good friend of mine, Sean Blakesley. He is a financial advisor, an extraordinaire in all things financial and long-term care. And Sean, please introduce yourself.
Yeah, thanks, Paul. Thanks for having me. This is great. I'm happy to be with everybody. I am a financial advisor, been one for going on 20 years now, deal with all kinds of financial products and situations. And so I'm looking forward to today talking about long-term care, which is obviously in your space, Paul, a big issue and something that I think this information could be beneficial to a lot of people for.
Yes, I think so completely. Long-term care is seeing a rise, I would say. I think it's seeing a comeback from before. And I think this is something that everyone, even with aging parents, or even if you're in your 40s, 50s, 60s, something that you should look into now for the future. And so, Sean, to just kind of kick things off, do you mind giving a brief overview of what long-term care insurance is and why someone might need it?
Yeah, so the idea with long-term care is to take care of what could be either long lasting or even permanent health issues. So, think of somebody in a nursing home or somebody in a rehab facility for a lengthy period of time. These are the types of situations that long term care insurance is designed to cover. The point of it is to really help people avoid financial ruin, if possible, because obviously long-term care and facilities and all the rest can be very expensive. So long-term care insurance is really designed to help relieve that burden, at least to an extent, so that people don't have to spend every dime that they have coming in or every dime that they have in savings on dealing with that type of an issue.
Yes, absolutely. And long-term care is beautiful because in our world, in order to have home care, that non-medical home care, you can either pay privately or long-term care insurance covers our services at home. So it's great. Like you said, the financial burden part, it is a huge factor in helping families not break the bank to get the care that they need. So, Sean, we get this question all the time when prospects or new clients call us, and they always ask, isn't long-term care something that health insurance or Medicare would cover? Why would someone need a separate policy away from the Medicare side of things?
Yeah, so Medicare insurance and health insurance are designed for different purposes. So both of them are really designed for short-term events and sort of acute care. So, you go to the hospital, you get something done, you're out. You're sick, you go to the doctor, you need some imaging, whatever. Those are the types of things that traditional healthcare is designed to do, and Medicare as well. What they are not designed to do is deal with those long lasting issues where you are in a care situation for a lengthy period of time. And that's when obviously those expenses would fall back on an individual. And that's the need then for long-term care insurance. Medicaid, which is different, Medicaid is designed for people who don't have the financial resources on their own to pay for care. Medicaid can pay long-term care expenses. And oftentimes, if somebody does run out of money or they don't have long-term care insurance, they will fall back on Medicaid to then continue their coverage and paying for their stay and anything else they might need.
Gotcha. Yeah. And I think that's a perfect segue to open it up to, if anybody who's watching this has questions with the difference between Medicaid, Medicare, long-term care insurance. Sean, I know you would be more than willing to help any folks dive into their portfolio or anything that they may need to kind of cover these bases.
Yeah, absolutely. Anytime.
Gotcha. All right. So, Sean, now that we kind of talked about the differences between Medicare, health insurance, and long-term care insurance. So can you dive into more specifics of what kind of expenses long-term care typically covers?
Yeah, so it can be a variety of things. It will depend on the policy you have and the benefits provided. I think we'll get into that a little bit more later. But home care is a great example of something that a policy might pay for. You said you've seen it in your business where people are coming in and finding out that they can use their long-term care to pay for your services, which is great. Obviously, nursing facilities and things like that, assisted living type facilities, adult daycare is sometimes covered as well, not always. One important thing with this process is to look at your policy when you're signing up and make sure you understand all the different things that it's going to pay for. But the general ones are nursing facilities, assisted living, home care, possibly adult daycare.
Perfect. And so that there's a wide scope of coverages that you can use for long-term care. So then how does someone determine the right amount of coverage that is needed for them? Is it, can it be customizable? Is it like a hard written copy of what it covers?
Yeah, so this is going to come down to what you want out of the policy. And to answer the customization question, the answer there is largely yes, it can be customized. Now, if you think of it in simple terms, right, the more money you have to throw at the insurance, the grander of a policy you can get and the more benefits you can get, right? But not everybody is going to have unlimited funds to do that. So that's when you have to start to make choices as to what you want the policy to cover. So the typical things that you're going to see in a policy that can be customized are going to be like how long the coverage is going to be for, the duration. Is it so many years, for example? Is it lifetime? I think lifetime is a feature that is less common than before. But, does it have an inflation rider attached to it, meaning that as long-term care costs go up, as they always do, is your policy going to keep up with that, or is it a static number? So that's a feature, for example, that can be added to a policy. Another thing you can customize is the elimination period. So how long do you have to be in a care situation before the policy will kick in? So if you elect for a longer elimination period, obviously your premiums will be less than one where you have a short elimination period. So those are some examples: duration, inflation, and your elimination period. Those are going to be the things that you can customize and will raise or lower the potential costs.
Gotcha. Yeah, and we've seen that firsthand. We've had some folks that have had 10-day elimination period, and we've had some folks that had close to 100. So
Yeah.
it's definitely a wide range in there. And
Yes, absolutely.
so now we kind of have a decent overview, at least, of long-term care insurance. So then what age range would you suggest should start looking into these kinds of coverages?
Well, I think it's important that if this is something that's important to you, you've had a family member who's gone through this, you've experienced it, both the expense and the mental stress that it can cause. I would say the younger that you start looking at it, the better. So the younger you are when you start looking at or start paying for long-term care insurance, the cheaper it's going to be over the span of time you pay for it. And the simpler too, because you can spread those payments out over your working years and all the rest. So the younger, the better. In addition, the older you get, you might develop health issues. And those health issues, if you have them when you're applying, you might be eliminated from coverage altogether, or you might end up paying more because you have a lower rating than you would have had if you did it when you were healthy. So those are a couple things that I think are important. So I would say from an age perspective, on the lower end where people really start to get serious about it is probably around 50, and 50 to 65 tends to be the range when people are seriously considering long-term care. The problem is if you wait too much beyond 65, you're starting to make it very expensive and more difficult to get.
So Sean, now that we talked about the age range and a couple other factors in there, but what are the different kinds of long-term care insurance and how does that affect the cost?
Yeah, so this is a great question, and not a lot of people know about this, but really there are two, I would say, primary kinds of long-term care insurance. There's the more traditional kind, and you can think of this very much like car insurance, okay? Because everybody pays car insurance, so you're familiar with how this works. Essentially, you pay a monthly premium in an ongoing fashion for a certain amount of coverage and benefits. And basically, if you don't ever use the coverage, you effectively lose the money that you've spent, right? Just like if you don't get in an accident with your car, you lose the money that you spent paying for the insurance. So very similar principle there. Main difference is long-term care insurance on a monthly basis is probably going to be much more expensive than you're used to with your auto insurance. The second type of long-term care insurance, and the kind that I'm really much more a fan of, is what's called a hybrid style. And what this is, it's effectively the combination of, let's say, two different types of products in one. So oftentimes it'll be like life insurance combined with long-term care. So it might be like a life insurance policy with a long-term care rider, or a long-term care policy with a life insurance rider, something, you can think of it either way. These work where you basically pay either in a lump sum fashion or in a series of payments over a number of years, often called a multi-pay. You pay into the policy and then you're done. You effectively pay a certain amount, whatever amount that is, based on the projections and everything that you do at the time you sign up. Once you've paid that amount, it's paid and your coverage is defined. You know what it is and you have it. The reason that I really like this style more than the traditional style is if you don't use the benefits, you can often either take the money back out of the policy, sometimes 100% of it, or maybe some reduced amount, let's say like 80%. Depends on the carrier and what you sign up for. But in many cases, there will be a provision for you to get the money back if you want it. But also, if you don't use it and you simply pass away, then that money, again, is not lost. It will transfer to your beneficiaries as a death benefit, as a life insurance benefit. A lot of people, it's a hard thing for them to stomach with traditional long-term care to pay all that money and not get the benefits. Now, one other thing that I will point out about this is with traditional long-term care, you can also get stuck in a situation where the policy premiums increase in future years and effectively make it unaffordable for you. So when I first got in the industry and my mentors were doing policies with their clients and I'm observing, one of the big selling points at the time was, hey, sign up for XYZ company. They've never raised premium rates on their policyholders. And so it's very appealing. Well, the problem is years later, many of them did.
Mm-hmm.
And so, if you are paying $300 a month, which is probably, a steal at this point, $500 a month, $700, whatever it may be for a decent policy. And all of a sudden, one year, a company comes back and says, hey, we're raising your premiums 25%. You might not be able to afford it and you got to let it go. And so that's another area where I think the hybrid style wins out in that that's all predefined up front. You pay what you're going to pay and you don't have to worry about premium increases hitting you and possibly making it unaffordable in the future. So,
yeah, it definitely sounds like there's a lot more flexibility in the hybrid policy rather
yeah.
than the standard. So this is all fantastic information and things that people have no idea until they actually have a conversation with somebody. So Sean, I appreciate you diving into that.
Yeah,
And
absolutely.
so moving on to our last couple points, what is the actual process like for buying long-term care insurance? Are there any health screenings or requirements or anything like that people should know about?
Yeah, you got to think because it is a health-oriented product, right? In many cases, there's going to be a health aspect to it, a health assessment, detailed questionnaire, possibly a medical exam, blood drawing, whatever. There can be a variety of things to determine somebody's insurability, right? Now, there are some more simplified issue type products that exist out there where you don't have as much of that type of stuff. But then again, you're not going to get as extensive a benefit set with those types of policies either. So, you can expect, just like with life insurance, that it's going to be a pretty thorough process. It can take several weeks from start to finish. So you want to keep that in your mind. But in the end, it's worth it. It's worth it to go through that process, make sure you check all the boxes, get the best possible premium price you can, know where you stand. But yes, to answer your question, there's definitely going to be some stuff involved in most cases.
Sure. Which makes sense. Which makes sense.
Yes.
So then our second to last one is actually my favorite point, and I'm sure this is a lot of people have heard different rumblings and rumors and all these crazy things about long-term care insurance. Are there any common misconceptions or myths regarding long-term care insurance that you can kind of go over that people should be aware of?
Yeah, I think so. One of them is that it's only for elderly people, right? Now, the vast majority of cases is going to be that case for elderly individuals who need care and they already have a policy because they're approaching that age. But it really could pertain to somebody who is younger but has a situation where they end up needing a long-term care scenario, an injury, an illness, any number of things. It can obviously strike younger people too. The other misconception we covered earlier, but we'll say it again, is that these things are covered by your ordinary insurance or by Medicare, and they're not. So once you get past that acute stage of care that traditional health insurance and Medicare are designed for, then it's going to fall on you to pay for nursing care and all the rest. And so, that's another common misconception that people have. Yeah.
Yeah, I think the largest misconception by far is, well, I have health insurance. Doesn't that cover it? And it goes, and like we discussed, no, it does not. And here's why. And
Yeah.
so,
Well, yeah. And before I forget, one other thing too is that one of the myths is that it's too expensive. Now, I will preface this by saying the reality with long-term care insurance is that many people can't afford it and won't be able to get it. If that's the case, there are other planning things you can do to help protect your assets and things of that sort, to prevent that financial ruin that can come from a long-term care scenario. There are other planning strategies, and anybody who's in that sort of situation, we can certainly talk about that stuff. But it is an expensive product, whether you pay the traditional style or you do the hybrid style. You really, need to plan on a significant outlay of money in order to get decent coverage these days, unfortunately. Now, so for people who have saved a lot of money, who are comfortable in their retirement, but this is a big concern because they don't want those $10,000, $15,000 a month bills to really wipe them out fast. But let's say they have money saved away, it's in the bank, it's in a savings bond, it's any number of places, and are really not needing it or doing anything with it. If people like that can be great candidates for hybrid policies, okay, where you do like a single pay or a multi-pay. Those can be great candidates for that. For people who have a high degree of disposable income, where their expenses are far less than their annual income, those people can be great candidates for the traditional style. So the myth of it being too expensive, it certainly can be for some people. That's not a myth in total. But I think looking at your situation and determining which direction would be best for you is an exercise that you should go through before you assume that it's going to be too expensive.
yes. And I could not have transitioned it any better to our final point than that. So for those who are interested, and I know you kind of just went over it, but for those who are interested and they're looking into choosing a provider, looking at this policy, why should they talk to someone like you before they kind of dive into this adventure on their own?
Yeah, absolutely. And I want to be as neutral as I can in this answer because obviously, I do this stuff, but there's many people who do. So what I would do is give people these points to look for. When you're dealing with somebody, you want to make sure that your advisor, and you might love the person, but it's very important that they have access to a wide variety of providers. Now, depending on where that advisor works through, the company they work for, they might have limitations on that imposed on them by the company that they work for. So it's important to have a situation where you can look at all kinds of different carriers to see which one might have the benefits and features that will fit you. And if you're limited to one or two, because those are the only ones that an advisor is allowed to deal with, that could, put you in a situation where you're overpaying or not getting the best coverage and things like that. Outside of that, you want to make sure that whatever carrier you're going with is well rated and well run. You want to make sure, something that you're paying for to use 20 years from now, 30 years from now, that you're dealing with a good company that's going to be here and be able to pay the bills, right? So those are the types of things that you want to look for. And finally, I would say, just somebody who can walk through the various features with you, settle on, the right elimination period, the right duration. Do you need inflation rider? Do you not? And try to make sure you end up in the best possible product.
Perfect. Well, Sean, I appreciate your time today. I think we covered a lot of fantastic information. And for those who are watching this, Sean's contact information will be in the description of this video, wherever you are seeing it, whether it's Facebook, LinkedIn, YouTube, on Right at Home's website. You'll be able to contact Sean if you have any questions, and I know he'll be happy to sit down with anybody and talk through this. So, Sean, I thank you very much for being
Thank
here,
you,
for
Paul.
doing this. Do
Really
you have
appreciate it.
any? Yeah. Do you have any closing remarks before we head out?
No, I want to thank you for taking the time. I know we've been talking about this for a long time. It's great to finally put something together. And like you said, if anybody has any questions, I'm happy to talk to them at any time. And appreciate it. I look forward to the next one.
Yeah. I appreciate you, Sean. Thank you so much. And
Thank you,
until
Paul.
next time.